Okay, it's 2 o'clock. Good afternoon, everyone. Welcome to the CFA Corporate Governance Committee. The first item on the agenda is the election of chairman. Do I have any nominations, please? Second. Others?
Thanks, everyone. Thanks, everybody. Welcome to the first meeting this new council in the CFA Corporate Governance Committee. As usual, this meeting will be recorded and uploaded to the CFA website after the meeting for viewing. Can I ask that all members and officers ensure their mobile phones are silent or switched off? Item number 2 is the election of the vice chairman. Do we have any nominations? Do we have a second of Mr. Piper? Mr. Morris? Do we have anybody else? Okay, congratulations, Mr. Piper. Vice Chair.
Congratulations to yourself.
Thank you. Moving down the agenda, item number 3, apologies from absence. I've received, yes, I've got a apology from Mr. Hamilton Grant, Mr. Vice's substitute. Okay, no other apologies. Okay. Item number 4, to receive any declarations of members in respect of items on the agenda. Does anyone have any interest in respect of items on the agenda? Okay, we'll get through this quite quickly. Item number 5, which is the urgent items and urgent items. Item number 6, chairman's announcements have 2 announcements. Earthquake in Venezuela. Following the earthquake in Venezuela, the UK government received a formal request for international aid, and the UK International Search and Rescue Team was mobilised. The 68-strong team plus 1 dog included 3 members of the Leicestershire Fire and Rescue Service. Well done to the Fire and Rescue Service from Leicestershire and of course everybody else. Operational deployments. Several significant operational deployments have occurred. The shopping centre fire in Birmingham applied 8 pumps. The field fire near East Midlands Airport applied 7 pumps. A fully loaded car transport on fire on the M1. A tragic water-related incident in Syston, and significant road collisions across multiple areas of the Leicestershire Rutland area. These are sadly highlighted and serving not always influence the outcomes of operational incidents, despite the best endeavours of the firefighters. Lives are being lost, unfortunately. I did actually follow the Thermoston shopping centre by the development on the social media, and also the tragic incident in Syston as well. Obviously the others are item number 7. First, we need to confirm the minutes of the meeting held on the 11th of March 2026. These on pages 5 to 18 of the agenda pack. I will move that the minutes held on the 11th of March 2026 be taken as read, confirmed and signed. Do I have a seconder? Mr. Piper. Thank you. The first main item on today's agenda is the draft statement of accounts 2025-26. This is on pages 30 to 128 of the agenda pack. Sarah Slater, our treasurer, will present this report.
This report is to provide CGC the opportunity to consider the draft state of accounts and the draft OGS for the financial year 25-26.
Recommendations to approve the submission to the CFA on the 22nd of July for approval, noting that they are both subject to amendment following an external audit review later in the year. The Accounting Audit Regulations 2015 stipulate that statement of accounts must be published with audit opinion and approved by the CFA by the 31st of January 2027. Draft statement of accounts required to be published on the 30th of June for public inspection, and these were published required. They were also submitted to Grant Thornton, who Terry is online today, and our external auditors. Grant Thornton will be carrying out the annual audit later in July and September, and this will also include the value for money audit. The regulations also require that we conduct an annual review of the effectiveness of our systems of internal control, which is the annual governance statement of the AGS. This is prepared in accordance with proper practices. Both the statement of accounts and the AGS should both be formally agreed by the CFA. Statement of accounts are prepared in accordance with the Code of Practice on Local Authority Accounting. This is separate to the management accounts, which are presented later on the agenda. The outturn report focuses primarily on the in-year financial performance, but the statement of accounts shows the performance in a format that is adopted by local authorities, which includes a balance sheet. Paragraph 8 shows the reconciliation from the statement of account to the comprehensive income and expenditure statement, the CIS. So the CIS shows a deficit of 1.1 million, but the revenue outturn shows a deficit of 150,000. The difference between the two is down to the required transactions in the statement of account that are accounting transactions, not essentially money transactions. So these relate to fixed assets, pensions, and other non-revenue related items. Statement of accounts contains key statements. The movement in reserves statement, the MERS, this is the movement in year on reserves held. This distinguishes usable reserves, ones that can be used to fund expenditure, and then the non-usable reserves. These are the ones that are effectively the accounting entries and are not available to spend. The CIS, the comprehensive income and expenditure statement, is the actual performance in year under practice. The balance sheet shows the net worth of the CFA with regards to assets and liabilities. It's the net value of an organisation. And then the cash flow statement summarises the movements of cash during the year. Statement of accounts contain accounting estimates. These rely on professional judgments by experts, and it's important to note that these key estimates, which relate to fixed assets, property and land, and the pensions liabilities. The annual governance statement is required and is prepared in accordance with proper practices in relation to internal control and is at the rear of the statement of accounts. Standards are set out in the CFA Solid Delivery of Governance in Local Government Framework, which was amended in 2025. The AGS should ensure our communities that CFA operates in accordance with the law and has due regard to the proper standards of behaviour, and that it safeguards public funds. The full document is submitted at Appendix 1. It starts with a narrative statement, moves on to the core financial statements with explanatory notes, and then the annual governance statements at the rear. And I'm happy to take any questions, Chair.
Good. Does anyone have any questions or comments? Any quite a comprehensive report with that, so going through all that. Just open up. Does anyone have any questions or comments? So
Just one comment, if I may, Chair. I think this is a funny report, and compliments to Sarah for completing it. So how you do all this within a year, I don't.
Yeah, well, Chair and Councillor, but obviously the team is responsible for putting them all together and doing a lot of the work. So it's a big team.
okay,
Chair, if I may, I recognise it's not my responsibility to thank Sarah as well, or my continued meeting, but I do want to kind of really reiterate to the CFA, we a couple of years ago brought the treasurer role back in terms of the organisation to give it time and capacity. And because of that, we've been able to, Sarah and our team, been able to kind of produce this really high level document really in a timely fashion. And that's real testament to us being able to bring the treasurer role back into service. So thanks to the corporate governance and CFA.
Okay, if there are no other questions, I'll move at the draft statements of accounts 2025 to 26 and the 2025 to 2026.
Hello, Chair. Chair.
Sorry.
Sorry,
Sorry, I didn't see you behind me.
Okay, I'm not sure how this dynamic's going to work today with three of us online and the Chair's back to us. I did have a couple of questions just on the accounts, so if that's possible.
Yeah.
Yeah, if everyone can hear me. I am struggling to hear colleagues because I think probably the distance.
We can hear you quite well.
Yeah. Okay. I was just just on the draft accounts. Just to check what were the most significant accounting judgments made. And is there a couple of questions? Then any issues likely to change before the audited accounts are presented? And thirdly, is the management satisfied that the accounts present a fair and balanced position? Just for a good assurance.
Did I miss your first part of the question there? I got the second and the third, but not the first, sorry.
I'm struggling to hear, sorry.
Sorry, she just said missed the first part of the question. Could you repeat?
Sorry, the first part is what the paper talks and the cover paper talks about accounting judgments were made. I'm just asking what were the most significant accounting judgments?
Thank you. I'll speak up a bit, sorry. So the main judgments are to do with the fixed assets and evaluations, that we have an external valuer on those. They're the biggest risk items within the balance sheet. And then the other is the pension liabilities, which we have GAD, which is the Government Actuaries Department, who do the firefighter pension. And we have the LGPS, the Local Government Pension Scheme, that's done by Leicestershire Pension Authority, which is, they use Hymans as the actuaries. So they're the judgments and the experts that we engage for the statement of accounts.
Thank you. And then just if you I don't know if you had my last two questions, if you want me to repeat those.
No, that's fine. So the changes, we don't envisage any changes. We think everything touch wood is okay there. So we don't envisage anything post the 31st of March to affect the statement of accounts.
Thank you. And management satisfied that the accounts present a fair and balanced position.
Yes, we've reconciled the statement of accounts to the management accounts, so we're satisfied from that perspective. We've been through that as an SLT, so there's been very few questions raised, and I think it is a fair view of the position.
Thank you very much.
Okay, that answer all your questions.
Yeah, that's fine. I think it's just get just to kick the tires with these accounts. Sometimes they are quite impregnable.
No problem. I'm facing the other way here, so yeah, please don't hesitate to shout if I do miss you. Apologies for that. Okay, right. I'll move that the draft statement of account 2025-26 and the 2025-26 annual government statement be considered and submitted to the combined fire authority on the 22nd of July 2026 for approval, noting that they may be subject to amendments following external audit. Do I have a seconder for that, Mr. Smith? Everybody okay with that? Great stuff. We'll go on to the next item, which is item number 9, the revenue and capital outturn report 2025-26. This is on pages 129 to 142 of your agenda pack. Again, over to Sarah for present this report. Thank you.
Thank you, Chair. The purpose of this report is to present the revenue and capital action position for 25-26. Again, this is subject to statement of accounts being audited. The recommendation is that the CGC recommends the CFA to approve the report on the 22nd of July, that they approve the outer position, that they approve a carry forward of 2.5 million capital surplus into 26-27, approve the movement on reserves. That's the recommendation, sorry.
Okay.
So down to the report, the CFA approved the original budget for 25-26 in February 25. The approved revenue budget at 4.1 million and the final position is a slight overspend of 150,000, which represents the continued improvement from the last part of the year. The overspend is primarily driven by the national pay awards, which were over budgeted. We budgeted for 2% and the pay awards came in at 3.2%, and also the national insurance increase to 1.25%, which was not fully funded by government grant. Pressures through the year have been mitigated through savings, proactive budget monitoring, and a slight increase in income. The capital programme was revised from 14 million to 4 million previously, following delays of the new L&D building and also the pause on the fleet replacement pending small compliance review. Final capital expenditure was 1.5 million, which represents 2.5 million to be slipped into 26-27 to align the funding with the actual delivery of those projects. The CFA's reserves remain robust with earmarked reserves supporting planned capital investment and mitigating financial risk. Slight overspend of 150k reduces the general reserve slightly, but it does maintain it at a level of approximately 5% of the net revenue expenditure, which is in line with strategy. The increase in reserves relates to the timing of capital expenditure, which will show reductions over the next few financial years as those projects complete. And move on to the revenue section. Paragraph 8 shows the table with the overall revenue position for each of the categories. Employee costs, as I previously stated, the main reason for the overspend is due to the pay award and the NI increase. We've had slight other overspends such as ill health retirements, the new on-call provision at Loughborough, agency staff earlier in the year. These have been offset by savings on the removal of the direct entry posts, various vacant posts through the year, and grant income that funds some of the posts. Approval is sought for the carry forward of 79,000 in relation to whole-time recruits to align the funding of the training with the actual spend. Premises. Significant work on budgets has been done through the year, and the employment of an electrician has created some savings. This trial will be continued with trialling a plumber through the 26-27 year. Transport costs have been lower than anticipated with maintenance, which is then reduced switching to the hybrid vehicles last year. However, we do see an increase in 26-27 as fuel prices have risen due to the recent conflict. We will also see a potential increase in mileage claims in 26-27 following HMRC's increase of the mileage allowance by 10 pence. Supplies and services have underspent, and this was further underspent this quarter by provision that we removed out of the numbers, but we have made a provision for the disposal of fire foam that is no longer in use. It's a one-off cost which we will need to pay for later in this year, so we provided for that in the 25-26 year, so it doesn't impact the 26-27 budgets. Approval is also sought to carry forward £60,000 in relation to the hydrant work, and that's again aligning the funding with the spend. Overspends in services have been in relation to the Motorola contract. However, this was planned and was offset by contingency in expenses, so one's underspent and one's overspent. ICT has also seen some savings through the year. Third party and support costs has a slight overspend, and this is relating to pension and payroll costs that were previously budgeted, but we discussed this, and they were in the 26-27 budget, which was approved in February. Capital financing costs, this includes the cost relating to external borrowing of PWLB loans and the statutory MRP, minimum revenue provision contribution that we have to do, and the contribution to reserves to fund the capital programme and remaining grants that have not been spent yet. Income has exceeded budget through the increased business rates offset by the business rates collection fund deficit. And we also saw an increase in the Section 1 income through the Building Safety Review Grant, the New Burdens Grant, and PNI grant. Other income we saw increased due to the settlement of the drug cartel legal case, and we've also received some contribution from Home Office with regards to a pension legal case. Investment income, we did reduce the forecast in year, based on the forecast that the interest rates were going to drop, but actually since Q2, we've seen an increase in investment income through a combination of the delays in the capital programme, moving to be investing in the money market funds, and also the approval by the CFA in February to increase our counterparty limits as part of the Treasury Management Strategy Statement 26-27, and then the effect on the interest rate, which is held since December, has enabled us to maximise our returns. Before I move on to capital, are there any questions related to revenue?
Question from Mr. Grimes.
Yeah, thanks very much for that. In relation to clarify page 30, when you're talking about the overspend with and it said pressure has been partly mitigated the non-pay spend, which proactive management we've seen. We talked through the increase in income. Just interested about not having savings and the proactive budget management. Is it the same? You talk about proactive budget management. Is it because certain things have just happened, or to use non-pay savings? If you align that with proactive budget management, just explain.
So we've been embedding our budget management process, so that has been evolving and has been improving. And then earlier in the year, the chief we had staff engagement for efficiencies, because at the beginning of the year we were forecast to overspend, and then a programme of efficiencies were put into place. So that was mainly around, we did a lot of that around non-pay spend, which is obviously, our biggest outturn, 80% of our staff costs. So we were concentrating on finding efficiencies in non-pay. So that's where some of the work has come about. So for instance, an example, we've done a lot of work on our cleaning contract, and we've managed to save money on our cleaning contract, which we stripped out of the budget 26-27. So they created a saving in 25-26. And then 26-27 has enabled us to obviously provide a balanced budget.
Okay, thank you. Mr. Smith.
Yeah, can we just come back on that, Chair? We see at the beginning of the year, like Sarah just said, progress saving huge amount of money, sort of nearly £1 million. Subsequent funding when Chief very rightly carried on with those savings. So you get the built-in.
Great, so thank you. Any more questions from the floor or online? I'm sorry,
It's not a financial one, it's just looking at supplies and services at 15. And it's talking about the one-off costs for the disposal of fire phone that's no longer in use. Does that mean that the service that no longer uses fire phone at all? Or is it fire phone that was something wrong with or out of date, so couldn't be used?
So I'll take that one if that's okay, Councillor Barton. As you'd expect, over years, legislation changes around what is acceptable to use and not use in certain terminology. So foam is a very, very good agent for certain types of fires, but it's incredibly damaging for the environment. So the older type foam was called PFAS foam. I'm sorry, I don't know what PFAS stands for, but the abridged for it is it contains a forever chemical. So we are no longer able to use that material for pipes and foam purposes. So we've replaced the foam, but clearly we need to dispose of that in the appropriate way. So it's a one-off disposal cost for those forever chemical foams. We still hold an aqueous film forming foam capability. We still have that facility. It's a different type of foam with different component parts that doesn't hold any forever as they're defined.
Okay, great. So any further input? You guys are online. Brilliant. Okay. In that case, I will move at the draft statement of accounts.
Sorry, Chair, that was just the revenue section. Sorry. I'll move on to capital. Paragraph 23 has table 2, which shows the capital outturn. So we'll start with fleet. The outturn is just the residual costs from expenditure from the previous year. And We haven't spent anything on fleet this year pending the small appliance review and the efficiency review. These have now been concluded and the fleet programme will be updated as part of the MTFP in November. With regards to estates, we re-reviewed at Q4. We were anticipating paying for the land for the development training centre, but unfortunately that didn't happen. We also, SLT approved some further underspend from the Wixton project to support a refurb at Kibworth, and any projects that weren't completed at year end will be done completed in 26-27. So therefore the budgets have slipped to align to the spend. Most of the spending year relates to retention payments and then completed work at Wixton and Bristol and Southern. We have done some pre-work on the workshops at Kibworth, Buckingham and Central, and all these projects will complete in 26-27. Equipment, we transferred some of the expenditure back to revenue just because of the nature of the expenditure. And so the total spend for equipment was slightly lower than expected. We've also got some projects not quite complete, so they will defer into 26-27. For ICT, we also transferred an element of the spend back to revenue, again by the nature of the transactions, and then the final spend related to a number of projects. The updated 26-27 capital programme will be presented as part of the Q1 budget monitoring at a later meeting. It will also include the solar power project that we have started as part of the sustainability work, where we're implementing solar power at 3 stations. The funding of the capital programme is shown at table 3. And before moving on to reserves, I will stop there for any questions relating to capital.
Great, so do we have any questions from the floor? I mean, Mr. Smith.
Just one chair, but wait, no, we briefly discussed this at CFA, the entities that some of these large black groups are very keen to purchase, then we can actually make an income as well as to savings as well. So that's maybe something that
As part of the programme, we're going to we're doing the 3 solar initially. There will be a paper to CFA on the solar, and then we'll look at a further sustainability plan, which will encompass more than just this solar.
Great, so do we have any more questions from the floor from online? You guys think okay? So look to back down to it.
And finally, reserves. So table 4 shows the usable reserves only. This final balance is held at 22.5 million, which is an overall increase, which is mainly due to the timing of the capital expenditure. Movements in reserves are detailed at paragraph 38. I don't propose to go through each one, but I'm happy to take any questions on those. And then finally, as part of this report, I have to mention the Treasury Management. We've had no departures from the Treasury strategy, and the annual Treasury Management report is presented next on the agenda. We also have to report any write-offs during the year, as required by the Constitution under the Financial Procedure Rules. We had a slight write-off, which it was within the chief's level, £175, which we wrote off relating to petty cash. During 26-27, there will be a review of the use of petty cash, and the provision of petty cash will be reduced. And that's me finally done, Chair. For any more questions or finished?
Any more any questions, 5 questions from the floor, or anything from online? No, okay.
Oh, there is one.
Okay, yes, sorry.
You spun around too quickly, Chair.
So sorry.
It's just a question on the reserves. I guess the resilience, what sort of testing or scenario of how resilient the reserves are if pressures continue, or the various assumptions around, like you said, last year was around the pay inflation and and those kind of gaps. Obviously, there was the overspends were offset by income, but if that income is not coming at the same level in the next financial year, I guess what sort of scenario or resilience testing on the reserves is going to be or will be carried out in 26-27?
Thank you. We've set the TFP that was approved by the CFA in February as part of budget setting. We balanced it for the 3 years. Obviously, we will be budget monitoring closely through that. We have got some elements of income that were still up in the air slightly, and we're still waiting on the Home Office MHCLG for the notification of those few grants. So at the moment, we're just watching and we're monitoring through the year. At the moment, the general fund reserve is healthy and above 5%. So that's a conversation if we ever need to go below that we would have to discuss with the CFA what actions would be taking place to resolve that.
Just add on to that, if I can do it. At the moment, our level of reserves is incredibly healthy. And as members will be well aware, we've been saving up and accruing money for the L&D spend. So it's likely over the next few years, the level of reserves will drop. That's planned and that's done in a controlled and sensible way to manage expectations before we get to that point. I think the other thing to answer the question directly is we've always been a very lean and tightly funded fire and rescue service. The financial settlement last year has actually put us in a little bit more of a comfortable position. I won't say completely comfortable, but at least we're recognising the fair funding formula appears to be allocating funding a little bit more fairly to us. So actually the pressures we're likely to face on the reserves is less than it was over the last sort of 5-6 years, for example. And some of the more significant pressures that may have come on the budget have been resolved only this last week, which is why it is in the paper around the pay assessment for grey book staff and gold book staff has been agreed at exactly what we budgeted for. There is still some unknown around the green book staff members, but that is a less of an impact on the overall budget of the service. So it's a fair question. I think we're in more of a resilient position now than we were last year, and the level of reserves we currently hold is incredibly generous because of that LD bill.
Great. So does that answer all your questions?
Yeah, I guess it's we'll see in November, as a colleague said, we'll see when the MTFP, and we'll see what that impact. But I think it's just generally resiliences of reserves is, and 5.2% of the general reserve is probably that's the area that I'm focusing on more than the other earmarked areas. It's just making sure that the tires have been kicked on that.
Great. So thank you. Okay. Nothing further. I'll move at the draft statements of accounts 2025-26 and the 2025-26 annual government statement. Doesn't that one, so I've not crossed that one off. Sorry. Yeah, I'll review. Right, I'll move that the report be noted and that it be recommended that the CFA at its meeting on the 22nd July 2026 be asked to approve the revenue and capital outturn position for 2025-26, subject to external audit. The carrying forward of 2.586 million of capital slippage into 2026 to 27 as detailed in paragraphs 22 to 35 of the report, and the movements on reserves as detailed in paragraphs 36 to 38 of the report. So can I see a second for that? Thank you, Mr. Piper. Everybody okay with that? So, sorry, there's lots of 2025 to 2026 that is probably not helping. So we'll move on to the Treasury Management Report and Review 2025 to 26. So our system on page is 143 to 156 of the agenda pack, and will again be presented by Sarah. Thank you.
Thank you, Chair. The purpose of this report is to update the Governance Committee on the Treasury Management activities for the financial year ending 25-26 and present the prudential indicators as required by the CFA Code of Practice on Treasury Management and the CFA Prudential Code for Capital Finance. The minimum reporting requirements were achieved with the annual Treasury Management Strategy Statement 25-26 approved in February 25. A mid-year update report was approved in August 25, and an annual review following the end of the year is this report. The report provides details of the outturn position of Treasury activity and highlights compliance with the CFA's policies. The CGC are asked to recommend to the CFA on the 22nd of July to approve that treasury management activity comply with treasury management strategy statement, strategy, and the annual report and associated prudential indicators at appendix 1. This report provides a comprehensive review of the treasury management activities for the financial year. It demonstrates how the CFA has managed its borrowing, investments, cash flow in line with the treasury management strategy and relevant curves. Prudent approach has been maintained, prioritising security over liquidity while seeking appropriate returns. Investment activity remained compliant with approved strategy, with funds held in short-term, high credit rating instruments to ensure flexibility of the cash flow. Excuse me. Cash investments as at the 31st of March are 19.5 million, and these are placed in money market funds and banks. Bank interest started the year at 4%, reduced at 4.5%, reducing to 3.75 in December. CFA continues to operate without undertaking new external borrowing, and existing debt levels are reducing as loans are repaid. The loans held at the end of the financial year were 8.1 million, with 2.0 million being repaid during the year. Capital expenditure in the year was lower than expected, and due to reprofiling into next year to align the funding with expenditure. The CFR, which is the capital finance requirement, has therefore reduced with a closing balance of 16.7 million, which is the CFA's under borrowing position. A training session for members and staff was carried out in November by our Treasury Management Advisors, MUFG. The report summarises the agreed strategy, the economic summary, the capital expenditure and borrowing activity, investment activity, and compliance with the Treasury and prudential limits. So the agreed strategy. This was approved in February 25, and we updated it in 2026. We updated it in February 26 for 26-27. No borrowing was planned and no borrowing has been taken, and the investments were aimed to ensure cash balances were invested prudently. The economic summary is being provided by MUFG. At paragraph 19, inflation remains high, peaking at 3.8 in September and easing to 3%. CPI inflation could see increases reaching 4.5 later this year, so we will continue to manage and watch that with MUFG. As I've said, the bank rate reduced by 0.25% in May, August, and finished in December, ending with 7.5 since then. Capital expenditure and borrowing. Table 1 at paragraph 23 shows how the capital programme was actually funded, which we've just been through the capital programme in the outturn report, so I don't propose to go into any detail except to confirm again that no external borrowing was taken out in line with the agreed strategy. Table 2 shows the CFA's capital financing requirement. Capital finance requirement is not allowed to rise indefinitely. With the strategy of not funding the capital programme for borrowing, it means the only transaction against the CFR is the minimum revenue provision charge, which reduces the CFR over time. The minimum revenue provision, the MRP, was planned at 518,000. However, following a review of the MRP policy, as approved in February 26 by the CFA, an additional charge of 39,000 was required. This has now been corrected within the 25-26 financial year, so the overall charge for MRP at the end of the year was 557,000. The final CFR balance is an under borrowing position. We have to bring in our gross borrowing. Now the gross borrowing currently is showing 11.1 million. That's 8.1 million of external borrowing, and due to IFRS 16, we have to bring in our other long-term liabilities, our leases. So 3 million of the 11 million is leases, which brings us to our under borrow position of 5.5 million. Table 3 shows the external borrowing position of our loans. And again, I've just said that it's outstanding at 8.1 million. And table 4 shows the maturity structure. of those loans as they will be repaid back. I'll pause there before going to investment activity, because it's obviously the treasury management report.
There's quite a lot there. Thanks, Sarah. Any questions for the floor, Mr. Smith?
Just related to our actual investments, obviously with interest rates drop fairly now above inflation. Studies still that money on so it's okay. Should we be looking at things a little bit more juicy to that one?
And what we've tried to do is, because the treasury management was done by the CFA previously, we're still embedding a lot of processes, and the cash flow forecast is now, we are now forecasting a longer period. So what we are trying to do is have a look at where we can invest for longer, because at the moment the interest rates are coming back quite good for longer investments. So at the moment, following the approval by the CFA in February for the Treasury Management Strategy 26-27 to increase the counterparty limits, being able to invest in a number of banking institutions with a really good rate for a longer term for up to 6 months. So we are trying to maximise it, but we are risk averse by nature. It is public money. We are trying to maximise the returns within our parameters.
You chair, say it's better rate, what sort of rate have you get?
So we've been getting over 4%, which at the moment, when we look at the money markets, so at the beginning of the financial year, when we opened the money market accounts, we were getting about 4%. Then obviously the interest rates dropped through the year to 3.75 in December. So we've seen a gradual drop, and the money markets are running about 3.6, 3.7. So we've been able to get above 4%, and only a little bit above 4% if we invest in a period of 6 months.
Good. And any questions online? Brilliant. Okay. To carry on, sir.
I think probably that was my next step. The treasury management, treasury management strategy includes the investment strategy, and the investment limits were reviewed, which the CFA approved in February, increasing the counterparty limits. The original investment budget, as I said, was reduced in line with the interest rate forecast, but however, with no further reduction since December, the interest rate has remained static, and we've been able to take advantage of that. We should keep our investments short term, no longer than 12 months, to cover cash flow needs. However, when possible, we should take advantage of competitive rates, which we have done with investments up to 6 months, which has given us a better rate of return. So they've remained robust through the years, and table 5 shows the investments held at the end of the year. The only other thing then to note is the compliance with Treasury and prudential limits. These indicators are shown at Appendix 1. There's a statutory duty for the CFA to determine and keep under review the affordable borrowing limits. So for 25-26, the service has operated within these limits. Happy to take any questions.
Okay. Any questions online there? No. Okay. And no comments or questions. Well done. So I think it's your last report. You've got a more late drop, but yeah, nice bits of great stuff. Okay. Right. Okay. I'll move at the report be noted and recommended that the CFA meeting on the 22nd July 2026 be after 2. That the Treasury Activity Report for 2025-26 complied with the EMSS for 2025-26 as amended in the EMSS for 2025-26. And B, that the Annual Treasury Management Report for 2025-26 and the associated prudential code indicators. Can I see the second for that one? If this is it, everybody okay with that one? Great stuff. Thank you. Okay, and item 11. Next, we have the audit plan for Leicestershire, Leicestershire, and Rutland combined fire authority, ending year 31st of March 2026. This is on pages 157 to 186 of the agenda. We have Terry Toby from Braunton, the CFA external auditors joining us online to present this report. Welcome, Eric.
Okay, thank you, Chair. Thank you. And as you rightly pointed out, the paper I'm talking to is on your page 157. So I'll assume you've had a chance to read this. So I will just focus on some highlights, which I'm sure you'll appreciate on this warm day. Firstly, looking at the planned work that we do on the accounts themselves. Now, we've identified 3 significant risks. And these are our highest level of risks in auditing the accounts. These are the valuation of land and buildings, the valuation of pensions liability. So those two, as we've discussed.
We just lost you there for a minute. I think.
Okay, sorry. I'll just adjust the microphone and just let me know if you have any problems there. So
that was our side.
Is that loud and clear? Right,
Yeah,
excellent. I'll look like something out of Star Trek holding this microphone like this, but anyway, I'll give it my best. So we've got 3 significant risks. One relating to the valuation of land and buildings, one relation to the pensions liability, and both of those are large estimated figures, as Sarah was discussing earlier on. And the third one is the management override of controls. Now, by way of reassurance, all 3 of those significant risks you would expect to see in every local government audit plan up and down the country. So it's nothing to do with any specific local risks in relation to this audit. Now, the detail of the work we're doing to address those 3 risks is actually set out in the plan itself, if you're interested. Our materiality for the year is 1.5 million. Now, that figure's based on the previous year's spend and is very similar.
We just a few technical issues here.
Okay. Shall I stop while you?
Yeah, but yeah, it's just I think there's a loose wire somewhere. Okay.
Okay.
It was fine until I had to put
No,
my
no,
laptop in.
Or no?
We okay?
Yeah, I think we're okay now. Sorry about that.
Okay. Would you like me to repeat any of that, or?
Sorry, it's in and out. Joys of technology. Could do some Star Trek technology, maybe. Okay.
Do you want to try again?
Should we try again? Yes.
Sorry about that.
Is that better?
Yeah, it's not your side, it's our side, I think.
Okay, I'll try and shout a bit as well, like Captain Kirk would do when he's angry. Would you like me to repeat any of that, or are you happy I just carry on from where I am?
I think you can just carry on. We've got bits of that, so I think we're
okay. Okay. So I was just explaining the.
Sorry.
If I may, I would like to go back to the 3 significant risks.
Yes.
I only heard 2 of them.
Okay, brilliant. And then the third one was management override control.
If I may interrupt you, sorry. I think the one I didn't hear, sorry, Chair, was the first one. I heard
Okay. So that's the valuation of land and buildings. So and the second one was the valuation of the pensions liability. So those 2. The land and buildings valuation, pensions liability, the reason they're significant risks is that there is quite a lot of subjectivity involved, as well as the fact they're very big figures as well in your account. So that's why they're in there. But what I was also went on to point out was that those 3 risks you would expect to see in virtually every local government audit plan up and down the country because those inherent risks would be there, and they're nothing really to do with Leicestershire Fire Authority in any shape and form. So they're not specific to you, but obviously because they relate to you, they are significant risks. And the work we are doing on those risks is actually set out in a bit more detail in the plan, but I won't go into that at this point. Our materiality level is 1.5 million, which is actually quite similar to the previous year. That's based on previous year's outturn expenditure. and the most significant aspect of materiality, it does impact various things on the audit, but is in relation to if we were to find an error that was at above that figure or even a little bit below that figure, then most likely that would lead to a change to the account. So that's the main significance of that. There is a much lower figure, as you'll see, of 12,500 that relates to senior officer remuneration, given the huge sensitivity of that figures and clearly the much smaller figures involved in that table in the accounts that we've just been looking at. Turning then to the second large aspect of our work, and that's in relation to the value for money work. You may remember that we identified a significant weakness in last year's annual auditor's report. The annual auditor's report is where we report our value for money work, and that was in relation to procurement and contract management. Now, as that was a significant risk last year, that translates into effectively a significant risk in our planning, and that's something that we'll want to follow up. And the detailed work that we'll do on that is actually set out in the plan. But clearly, internal audit have been doing an awful lot of work in this area recently. So our first port of call will be to look at the work that they've been doing and their findings, because a lot has changed since the new procurement manager was appointed last year. And also worth pointing out that we'll also follow up on the 5 improvement recommendations. So they were kind of a lesser level of recommendations that we made in that report last year. So we'll be following up on those. Now, the plan in terms of delivery is that both of the 2 reports, the 2 areas of output from the audit, which is the audit findings report, which is the accounts bit, and the annual auditor's annual report, which is the VFM bit, will go to the November Corporate Governance Committee. And that we plan to sign off the accounts much earlier this year in November. So that's well ahead of the national 31st of January backstop deadline there. Now, at this stage, you and we are well placed for that. So there's a lot more interim testing has work has been able to be completed this year. And as you know, from our audit finance report last year, the new finance team made great strides in addressing a lot of the legacy issues, in particularly in relation to land and buildings valuation. So that was really good to see. I don't really think there's anything more really to highlight from the audit plan at this stage, so I'll just really pause at this point and invite any questions or comments.
Do you have questions or comments from the floor or online? So it is quite a detailed report, which is good. I've just seen that the audit PS is down for 2025-26, which is always good. So
Yes.
Which is pleased about that one. So did you have anything to add to it, Terry?
Okay. Thank you very much. Thank you.
Okay. Great stuff. Okay. I'm just going to move that report be noted. So everybody happy with the report. Okay. I'm sorry. I need a second for that one. So second of Craig again. Right. Item 12 is the head of internal audit service annual report 2025-26. This is on pages 187 to 218 of the agenda pack. I've got Neil Jones. You just trying to get. I knew I'd seen somewhere. I didn't know whether you'd catching up to present the report. Thank you.
Yeah, thanks, Keir. So I'm here to provide members with a summary of the head of internal audit service annual report for 25-26 and highlight any key assurance messages, any risks or matters for the committee's consideration. So this report is mandatory requirement as part of internal audit standards and code of practice, and governance of internal audit, which of course includes filing of them. Report fulfills the committee's responsibility to review the effectiveness of the internal audit arrangements, and it supports reports on the wider governance framework Sarah has already mentioned, i.e. the annual governance statement. The recommendation is to note the annual report, consider whether it's satisfied, consider whether the committee is satisfied with the level of assurance I've provided, and then make any observations on the findings and conclusions. The key assurance message is my annual conclusion. That was previously known as an annual opinion. Change really, it's just a change of word. And for 25-26, I have concluded that there's reasonable assurance that the CFA's governance, risk management, and control arrangements and overall adequate and effective during. Just come back to reasonable assurance. It is a positive statement, and it recognises that internal controls reducing risks to acceptable. Can't have control in any other neighbours. So it's not a worrying when I say reasonable, it's not a worrying. So the conclusion is based on several factors. The results of our completed internal work, the monitoring of management actions arising from our recommendations. My professional judgment is allowed in turn, including reviewing other officers' reports to this committee, and also an objective consideration of how members engage as part of my holistic assessment of good governance. And then I can consider other assurance providers, the external auditor, and the HM inspection, the follow-up activity that's taking place with that. And then, of course, we have regular engagement with senior officers, especially Sarah and that, as the external auditor, as mentioned, is really ramped up in terms of positive areas. 7 of our audits returned substantial assurance, indicating control will have designed and effectively. Our customer feedback remained satisfied. We delivered the planned 110 days, and the cost was in line with the estimate. We did a self-assessment of the new against new standards. That comes out with a rather bland top rating, and generally informed. You know, say at the same time, it is the top rating. And then we continue to develop our own internal capabilities in terms of use of data analytics and risk areas. Nevertheless, there were areas that were required to bring to attention. This had just been mentioned by the external auditor on the end was around procurement and contract procedure. So we did follow up reviews, procurement and contract procedure during the year due to previously unimplemented high priority recommendation. However, and again, it's just been substantial progress has subsequently been made. Risk exposure is now considered significantly reduced to an acceptable level. I do note that the position improved sufficiently to support a revised substantial assurances. I'll provide more detail on the progress against them in my opinion. So our plan remained flexible. We didn't have many changes this year in terms of different audits, but it does allow work to be moved for extra times we spent on hours of work like to the next year. I mentioned we conform the standards, the new standards from 1995. We did a detailed self-assessment of themselves. We had over the course of the year, members would have seen that we reported on 3 areas of governance documentation that required. We also reviewed our quality assurance and improvement program. I think overall, in terms of those, it was incremental improvement actions rather than improvement. I also was able to feed into the annual governance statement from Sarah and Ben a couple of weeks back. I did that previously as well for 24-25 and 25-26. I have to, in my reporting, I have to report anything that I thought was fundamental. It may be needed in 25-26. I think Sarah and Ben have covered it all off before the side within 26. So in conclusion, report presents a positive assurance position for 25-26. Again, despite the historical concern around governance, I have concluded that risk management control arrangements remain effective. And I think the committee can therefore take reasonable assurance from the work. That's all I have to say, Chair.
Okay, great. So when you say, reasonable assurance, also on a scale of 1 to 10, 10 being complete assurance, we'll say a 6, 7.
I will never, people know me in this room, I'll never give complete assurance.
Yeah, obviously, yeah.
I guess we're looking at, 7, 8.
Okay.
In terms of that, because we can only.
Yeah, I don't
get
understand.
What's more important is that individually those audit areas were originally graded, limited as partial assurance, and now the work has been reasonable. I'll touch on that one, but that's for, and then the reasonable applies to so individual audits have their own conclusions. And it's much easier to focus on just the key auditing, but when you're looking at the overall control environment, it balances itself out. So that one area is balanced out by all the other substantial.
Do you have any more questions from the floor or online? Can't see hands up online. So okay, so that's the I'll move that the head of internal audit service and report 2024-2026 be noted. Another second for that one. I'll go to Bart this time. Very content. So everybody okay with that? Next, we have the progress against the internal audit plan 2026 to 2027.
Let's say again.
That's it's on it's on pages 219 to 242.
Thanks, Chair, and apologies, I perhaps should have mentioned again earlier on. Matt Davis would normally be here presenting the report. He doesn't available today, so I'll present. This is to update the committee on progress against the current year's plan 26.7. Provide assurance that the work falling from last year, and then just again another brief update on related. I think it's important the committee does understand. So the committee will be asked to note that the previous year 25-26 plan was complete. Progress against this year's plan is on track and consistent with expectations for this point in the year. Quite early. And then I'll mention about the 2. So completion of plan, all outstanding work completed. 7 of which was substantial. Against this year's plan 26-27, we rolled over a plan for 210 days, and that remains on schedule. Just in brief, we've got one report at draft report stage that relates to procurement. More information has been provided, but we're still confident in the status. There's field work underway on 10 audits at the moment across a variety. Sarah mentioned earlier on in her treasury management reports, we have got an audit planned treasury management. It's going to be September. And so the current reviews include financial systems, payroll, pensions, all of them, and some back payments, which is quite a lot. So procurement improvements. I said I'd quickly just give an update on the. So we did some follow-up work. Start of 26. This is where it's demonstrating substantial improvement. So just as a list, contract management at the range, significant. Electronic contract management is large. Training goals and monitoring. Had a conversation briefly with Sarah. That was a 67%. Took it down to 20%. Which is an excellent turnaround. Spend monitoring controls have been established. Excuse me, the revised contract procedure rules were approved in February. And to mention dedicated structure established. So I think subject to those points there, and the committee's approval, our high court can be closed. And I don't think at this point in time, now we're further to consider this. So the exit level we did mention, they will come back to us and say, "You're duplicate, that was about to." I think any key risks and considerations, well, we are early in the year and whilst our delivery is on track, obviously that department is flexible. So if there are any significant changes. And I think that's all I'd like to say, Chair.
Thanks. Like that. So do you have any questions from the floor or online? Okay. No questions. That report. So I'll move that the report be noted and that the 2025-26 audit plan is now complete. Work is progressing well with the 2026 to 2027 audit plan. It remains at the same anticipated for this time of year, and the two partial assurance reports in relation to procurement have now been sufficiently addressed in order to reduce the risk exposure at acceptable level. Do I have a seconder for that one? I'll go for Mr. Pfeiffer, and everyone's okay with that. Okay. Item 14, the performance monitoring. April 2025 to March 2026 and April 2025 to May 2026. This is on pages 243 to 204 of your agenda pack. We've got forwards to just over here.
It is, yes, sorry, yes. It's okay, Chair, I'll do now.
Okay, that's right.
Yeah. So as mentioned, the report consists of two main updates really. The first is the report for the entire financial year for 25-26, and then the first quarter update 26-27. So as you'd expect, I'll spend most of the time reviewing the full year update because I think it gives us the best kind of data set to work from. That can be found in Appendix 1 under on page 247. And as usual, I'll focus on those KPI tables, page 247 to 249 up them. So my overall reflection for the year is it's a very, very good set of figures, particularly based on a lot of the other stuff going on in the organisation we've heard about today. But there's some very strong figures supporting what I feel is a very good level of service to the community. And I would also suggest strongly to the HMI that it's indicative of good fire and rescue service across the board. And it's certainly a set of figures that I am proud of, and I'm proud to lead the service whilst we deliver that. So looking at a few of these in a bit more depth, KCI number 1 looks at the incidents attended, and it's fair to say this last year has seen a reasonable increase in all incident types we've attended. This follows on from a really successful period for fire and rescue services, probably the last 15 to 20 years, where we've seen incident numbers falling, and certainly the last 3 or 4 years plateauing. But last year we have seen an uptick across the board. That is indicative of all fire and rescue service, so the national trend is showing something very, very similar. It could probably be attributed to weather change, particularly hot weather periods. So if you look at KCI 1.2A and 1.2B, so primary and secondary fires, you would have seen a notable increase in those figures in April and August. And I strongly suspect this year will be no different. And it's probably going to start to set the trend that we see year on year as climate change really does have an effect. Looking down to KCI 1.4B, special services, members will recall previous papers being presented to both this committee and the combined fire full authority around concern around police's approach to most appropriate agency, and certainly some of that workload seeming to transfer to fire and rescue services. And this full year has kind of really demonstrated it. The numbers were high previously, and they have increased again further. We are bringing a paper to the next full authority to start discussing a approach that we'd like to take towards that and looking to reduce that, mitigate the impact on fire and rescue services where possible. So I won't spend too much time talking about it here, but rest assured the paper is coming to full authority in a couple of weeks' time, where we are proposing a course of action. as I do now believe the workload and the potential impact of the service get to a level where it could compromise our ability to statutory duties. So therefore, we are proposing slightly different routes. Happy to take any questions on it, but don't propose to go into too much detail right now. KCI 2, which is spread over pages 247 and 48 of the bundle, details the number of fire fatalities, casualties, and the same for non-fire fatalities and casualties. And sadly, members will note that both fire and non-fire deaths are higher than previous. Clearly, our aspiration for this is always to get it to zero, but with a population of over 1.2 million, that seems very ambitious and difficult to achieve at the time. If I speak specifically around the fire fatalities, most of these were unpreventable from our point of view. They were caused through a deliberate act by we are not going to be able to get that people, but there are still some areas where we would like to improve. I really will try and get those numbers down to zero. Colleague area manager Bo is now taking a bit more of a track safety partnership in a hope to steer and influence that a little bit more directly here if we can offer something to reduce those numbers. Clearly, we do want those numbers to be as low as possible, but sometimes that isn't possible to ask. KCI 3 focuses on our attendance times across all incident categories and appliance availability. And I'm sure members will agree this is a positive set of figures which show our continued focus and continued improvement on responding to these incidents, where all CRMP standards have been met or bettered, and we continue to look to meet or better them as we move year on year. And I would also stress and highlight to members that the 10 and 12-minute attendance standards also include that call handling time that members here today would have seen in the control room. That isn't always easy to extract some information from people, but those times include that call handling time and mobilisation time and drive time to arrive. KCI 3.5 shows the availability of our hold time and on-call appliances. Members will note a drop in hold time availability of just about 2.5%. This is for two clear reasons. One, as highlighted previously to the CFA, the changes we made at Castle Donington and the relocation of appliances inadvertently detrimented that appliance availability figure. One appliance wasn't available whilst the two appliances were moving forward. That's now been rectified as we've moved away from that arrangement. So I do expect to see that availability figure to increase. And the second is a bit more of a transactional arrangement. As we've gone through some of those financial pressures earlier in the year, we had potentially envisaged losing members of staff of the establishment through cuts. Thankfully, we've been able to avoid that, but it did mean the establishment number dropped a little bit lower than we would potentially like. Pleased to say now 17 new recruits. We welcome them back into service from their training on Friday last week, and they're due, after a little bit of conversion training, to go onto fire stations in August for this year. So we do expect that availability figure to improve significantly with 17 fresh-faced and very keen firefighters pulling at the reins to get onto fire engines, and we're just so that should again resolve moving forward. KCI 3.7 is the customer satisfaction levels with our services that we provide, and I'm sure you'll appreciate, if not as much as most, more than most. World is a difficult place at the moment with a lot of tension, a lot of friction, a lot of opinions, and a public that seems very willing to express their opinions, whether they be valid or invalid. So it's real testament, and I'm really, really proud of the fact that the customer satisfaction levels remain 100% and very close to 100% throughout. And I'm sure my colleague area manager Walters will build on that with the last paper today around some of the actual comments we've received. We're really proud that we're delivering in a challenging environment and still delivering really, really well. Our community wants. KCI 4 and 5, I won't spend a lot of time on these because I previously spent an awful lot of time lauding the work of our prevention and protection teams, but they continue to deliver a vast quantity of work to a really, really good standard that places us well in the top quartile of fire and rescue services. And that's pretty amazing given our size, makeup and financial setup. That's a really, really good figure, good sets of figures that, again, I and the team are incredibly proud of. KCI 6 is around sickness. And I think it's fair to say, whilst the figures are improving and sickness is dropping, this is an area I'm still quite concerned about. The level of adults we've got, I would still like to see lower. It's certainly something I and the team are challenging the rest of the organisation on to really get underneath this. And I do want to see this improve into the next year and continually. So I do think we would probably still be below the national standards, but I haven't yet seen those for the last complete year. Still an area that I'm concerned of, and our abstraction rate is still quite high. So it's a positive news story that it's coming down, not one that I'm yet comfortable with and you know, flag up to the rooftops about, because I still want to see something further improvement. But overall, my reflection on the complete year figures is it's pretty impressive as an organisation. We're delivering well on our strategy, public areas that we want to. Appendix 2, on page 251 and 254 of your bundle, covers the first 2 months of 26-27. I would not try to steer you away from it, so it's a relatively small data set. I can't really draw any kind of comparisons or accurate reports on to you. The only thing I would note about that is that now takes the new template with a couple of additional measures in there that the Corporate Governance Committee have previously signed off on. It should give you a bit more flavour around certain areas of what the organisation is doing. Most notably for me, it does see an introduction of some cyber information for you, as that is a challenging area for any organisation, ourselves included, and it will start to show you some of the levels of preventive attacks we're experiencing. Clearly, if we receive any suitable, successful attack, we'll report those to you separately. But it's an area we've invested in, so I do think it's one that we should be cited on. Clearly, it's a large risk on the National Risk Register, the organisation risk register, so it's only right to report on. So I'm conscious I've galloped through quite a lot there, Chair, but there's a lot of information there, so I'll pause there for any questions individuals may have.
But thanks, I've got, Mr. Smith.
Thanks, Chief, and congratulations. It's cracking, especially with some satisfaction. So just come back to KCI 2 being 4, so 2.3. The non-fire incidents, I presume that they're mostly RTCs.
So there are a mixture of road traffic collisions and where we're doing support for other agents of gaining entry for the ambulance service. So it's not to say more people are dying across LLR. I think as we go into that increased number of incidents, we're encountering fatalities much more. That does put a moral and personal burden on our staff, which I didn't talk about, but the KCI 2.5, the number of trauma risk incident management response to do thankfully is relatively low. But what we are seeing is the number of road traffic fatalities has increased, but equally the exposure we have fatalities where we're supporting other agencies has increased.
So the chair will just come back in line. The other areas, prevention to response for viruses. Ten as an exposed projects.
Absolutely.
That's it. Father of you. Constantly telling to drive safe and everything else, but it is that demographic that tends to be. Yes, I get more and more issues on standard.
So certainly, the Hazard Express, for those that don't know, is an initiative we've been running for a few years, where we've got this a very creative vehicle with virtual reality in the back and motion sensors in the back, so you can experience and expose people to a memory in a safe environment, and that targeted new and young drivers particularly. I don't have the numbers to hand, but we can probably get them for you relatively quickly. That's out most days, delivering packages. We visit at least every secondary school once a year that will have us. And the numbers of people we get through are really quite impressive. We are working with the Road Safety Partnership around how we can engage a little bit further and add potentially a bit more value to that. We're not one of the, I don't know what's the correct words, we're a statutory partner, but we're not necessarily one of the decision-making board.
Yeah, we've not got a voting capacity on the strategic board for the Road Safety Partnership, but we're making some proposals to improve targeting our safety advice to the demographics of where this will go.
So I think it's fair to say that's the increasing risk in the community. Whether you look at incidents, numbers of casualties, fatalities, or numbers of journeys and numbers of vehicles on the road, it's the risk that is increasing. So we're keen in the partnership space to perhaps step in and lean in a little bit more, see if we can influence it in a new direction. Time will tell which we can get successful.
Great stuff. That's right, Craig. So I've got Mr. Piper.
Thank you very much. Chief, the sickness figures you've got there, do you actually look at the breakdown of those as to which are work-related, physical and psychological, opposed to those which are non-related? And do you see any change in those differences?
So yes, we do, and we actually have quite a detailed Sydney breakdown. So clearly, that's not right to share in this environment. Some of that information might be identifiable. We are seeing quite a lot of sickness now, probably over 50% of my observation is non-service related, is outside work pressures. That seems to be growing and having quite a large impact on the organisation. Got quite a comprehensive occupational health department and team who support people coming back either from physical injury or other illnesses. But it's a concern, one that I think we need to look a little bit more at. Where we have to be very careful is clearly we don't provide a secondary health service. That all has to go through the NHS, which actually we're all aware is under pressure. But we're keen to get people back to work as quickly as possible, but as safely as possible as well. There is a very fine nuance in this around dragging people back to work at the time, but actually detrimental to them and us. But equally, we do need people doing the work that we're having to.
Sometimes, if I may carry on, dragging back to work a little bit earlier can actually be helpful, but without being a doctor or psychiatrist,
So it's very nuanced, it comes to impacts, previous conditions, etc. But like I said, it's an area I think we can still improve on and should still improve on, and it's the abstraction rates are quite concerning.
Any further questions? Any questions online? No. Okay, thank you. Okay. All right. I'll move that the performance and so the performance of the Leicester Fire and Rescue Service for the period 2025 to March 2026 and April to May 2026 be noted. Have a second for that one. Mr. Piper, everybody's okay with that. Right, we now move to the service development and CRMP 2024 to 2028, 2025 refresh actions. This is on 250, page 255, 278 of the agenda. Is that one to you, Paul?
This one's mine, yeah. Thank you, members. Good afternoon. The report covers the progress since March on the 11 projects that are included within the service development programme, plus the 30-odd actions that are under the 5 CRMP strategies. The overall picture on the report, it is a strong delivery. There are 2 big projects about to launch, and then there are a small number of supplier-driven slippages, which I will cover, but I think members ought to be aware. Firstly, the headline wins. The Southern Fire and Rescue Station refurb, as you'll have seen today, has been completed, and I'm sure you'll agree that it's been completed to a very high standard. It provides a modern base for our staff to work in. The water rescue uplift, again, members will be aware that you approved the service for officers to uplift our water rescue capability to Mod 3 at 5 stations. They are now all up and running. They're Birstall, Loughborough, Oakham, Southern, Wixton. Pleased to say that it was delivered on budget, and this project is now closed. There was a lot of work that went in by officers to make sure that that was delivered. And that included working very closely with the rep bodies to ensure that there weren't any delays on that. The 3 response strategy CRMP actions, 53 to 56, have all been completed. This included the changing of the duty system at Castle Donington from a day crude station to a 12 cell rostering station. That went live on the 1st of April this year, which then impacted the removal of the TRVs, both at Western and at Loughborough Station. TRV that is at Loughborough then became the tactical response vehicle for the on-call section of Loughborough. So it drove out the appliance room door as one appliance and then drove back in the rear as another appliance. Again, that falls into the Loughborough on-call project, which is now completed at stage 1. Again, I won't repeat what the chief has already alluded to around the prevention and protection targets, but it is one that I'm extremely proud of and one that our staff have worked incredibly hard on delivering, and it has put us in the top quartile nationally. The 2 projects that are coming down the line that are both going to be very demanding and require a lot of staff resource. The first one is the Learning and Development Training Centre that has been, feels like it's been going on for ages. We have got the planning permission. We are just waiting to exchange on the land. And I know, members, I keep saying it every meeting, it's any day now that's going to be imminent. There are a few legal technicalities that we are working through solicitors. I am hoping by the next full CFA that I can provide you a positive action that we have secured the land and it is ours. But that isn't derailing what we're trying to do, because we are working behind the scenes and looking at the procurement framework. We have identified which framework we are going on. We have appointed a project management consultant that will lead on it. So the work is going on in tandem whilst we haven't got the land. Yes. Any day now. We'll provide, once it's finished, a full timeline to CFA, and you can hold me to account. Any day now. The next big one, which is one that the full CFA approved, and this is the service redesign project, and that's covered on 27. This is the organisational wide structural review, identifying any capability or inconsistencies in role design and workload that we are now delivering for a modern fire and rescue service. I've been in the service 34 years and I can't remember is ever having such a redesign such as this. So it is a massive project. It will require a lot of work, and there is a lot of work to do to bring us up to a modern fire and rescue service, including embracing technology where possible. It will lead me on to 3 things that have slipped from a project perspective. These are the 7.8 project, the PPMRS, or as it's now called, the Prevent and Protect system. Again, both of those projects have slipped due to supplier issues. We have engaged with the supplier right at the onset to try and minimise these slippages. I'm aware my colleague, CFA Ben B, has been on a call this morning, and we are assured that we'll without any additional costs to the authority. And then the other 2, I'm going to combine them as one because they're refurb projects. The Uppingham and Kibworth, again, this is purely down to supplier selection timing. Project will go ahead again. Whilst they won't bring them up to the same standard as Southern Station, they will make them fit for purpose for an on-call section, again, a modern fire and rescue service. Just to cover some of the other work now that's going around the CRMP strategies. The estates plan, again, covered where we are. Solar, the work for solar installation is now well underway at the 3 stations in Ashby, Castle Donington and Oakham, which then leads into the wider sustainability work that we will be doing, taking on the point around battery storage as well. Trying to include that. So, fleet replacement strategy, again, Sarah has covered that. We have been waiting for the outturn of the small appliance review. This is where we went back out to staff following the engagement and the feedback that they wanted to be more involved in selection of vehicles, we did a project, we got all their comments, what was good about the VRVs, the TRVs, what they would change. I led on the team on that. We've now come up with a high level user specification. That is currently at pre-market engagement, which we're looking at. The framework, there are 5 suppliers on that. What have they got currently? What can they offer? So that work is underway. The build and strategy. The ICT, we're progressing towards the Cyber Essentials Plus on the corporate network. The Procurement Act 2023, again, we've got the procurement manager in place now, and we're starting work in delivering procurement training to all of our staff. I look at the people strategy. Again, the boss was alluding to, we had 17 recruits, brand new recruits there, passed out on Friday. Hopefully joining us. They will be operational the first week of August. They have been given all of their postings. That was done yesterday. So we have 17 extremely excited firefighters that can't wait to go operational. The gender pay gap, again, that was published at the end of March. We are better than the national average, and the action plan is already ready for 2027's gap. And again, well-being from people perspective, 91% of our staff have completed their annual fitness testing. Again, it's a rolling 12 months, which is why it's at 91, not 100. 97.5% of those pass first time, which is again pleasing from a service perspective. We have set up a menopause working group, and that's agreed the terms of reference to support our staff in the workplace. Talent pools. A talent pool is where we are looking for to promote our staff. So we have our watch manager process that is completed. We have our crew manager talent pool that has been completed. We now have staff in those pools that we can pull from for any future promotions, and we are just at the final stage of our area manager talent pool, which we can then start to appoint our area managers, which will then have a knock-on effect. Chair, I'm very conscious that I've rambled on quite some time now, and I'm happy to answer any questions.
That was quite positive. Good thought. You might not be able to answer these, just specifically on the training development centre. You mentioned the project manager being appointed. Do you agree with the point? Then the government framework.
One so
Any interest in that one either. Okay, great, Lisa. Do you have any other questions from the floor or any questions or not? I'd have Councillor Bartley.
I've got 2. One is related to the sort of 95% pass rate on fitness. Are those class? Is it age related? Is it something that could be predicted that you support with to be able to pass first time in the future as people's strength becomes 6% every decade? Apparently.
So it isn't identifiable by age. So it's not the older you get, the less likely you are to. There may be a number of reasons without saying what they are and identifying the staff. There are a number of reasons. It may be that they've been on a period of modified duties for a period of time and it's their first test. What we do have is we have fantastic facilities, almost as good as the David Lloyd gyms. I think gyms are available. That we provide to our staff for them to maintain the level of fitness. So we have all the support, we have fitness advisors in place to enable staff to do it. It may be a nuance as to why they're not passing.
But can I just add on to that, because I think it is one we are going to have to watch. So currently we're on those trends, but clearly with the retirement timeline has moved from 50 to 55 to potentially 60 plus, that is likely to be an area that we are going to need to provide more support, more encouragement, etc., etc. So it's not to say we're blind to it. I think even speaking a bit more frankly, the gender impact is more likely to disadvantage elder females. They don't hold their own, just with the way the muscles deteriorate in females as they get older. So it's an area we are going to have to keep quite a keen eye on. We're not seeing that trend yet.
The other one was about having all my staff to apply, promoted a lot more different posts. I'm glad to hear that coming through, because it's something that I remember discussing years ago, and I'm glad to hear that's something now which is coming through and giving us that call so that we can keep local people in the service.
We run the talent pools every 12 months from crew manager right up to station manager. The group and area are, because there are 18 posts, and trying to run those as and when they're required. But it is an annual post. Once they're in post, we then give them the development that they need to then apply for the position that they do.
Great, thanks, Jason. So, and any further questions? Any questions online? No questions online. No further questions. So, okay. I will move on the progress made since March 2026 in the delivery of projects within the service development programme and the tasks included in the CRMP 2024 to 2028. 2025 refresh. There will be notes. Have a second of that one. Mr. Piper, everything's okay with that. Great. Okay. I'm just going to say, we'll be going for about an hour and a half. Everybody okay to carry on? Okay. Brilliant. Okay. So next we have the HMIC FRS plan for improvement update. This is on pages 279 to 300. Again, the fact I've got GP property or whatever.
Thank you, Chair. So members will, of course, be familiar with the ever-catchy HMI CRFS, which is the Manchester Inspectorate Staggering Fire and Rescue Services, and this last report into Leicestershire Fire and Rescue Service. Members have received regular updates through this committee on our progress. However, I wanted to expand the report on this occasion, just to kind of give you full transparency, full sight of the improvements we're looking to make, we're making, and have made. I'm really conscious it has previously internal and external interest and some legal interest. So I did want us to really start on the sheer amount of focus members into that. So it's quite a long paper, so I don't propose to take it step by step. You'll be pleased to hear, but I did want you to have full transparency around the amount of activity that we're looking at, particularly around culture, particularly around leadership, and particularly around engagement of the workforce. We don't know yet when our next inspection will be. We're believing it's going to be probably sort of September, October 2027. And a lot of the work you've heard about today, particularly in the world of finance and improvements we made, I am confident and expecting a bit better improved outcome from the inspection report, but we don't yet know the date for that. So I won't labour every point, but I did want to provide you with a bit of an extended paper on this occasion, so you can really give that level of scrutiny that you may want to. And I'll pause there, Chair, and take any questions.
And any questions? Yeah. Questions online or okay online? So Carol, if you could report.
Yeah, I mean, I could talk at it for length if you wanted to.
Okay. Right, I'll move that the content of the report and supporting dependencies being noted. The progress made against the HMIC FRS improvement plan, cultural values, recommendations, and standards of behaviour recommendations being noted. C, the government assurance and evidence arrangements that have been established be noted. B, that the areas where further work is required, particularly in relation to the service improvement initiatives, evidence quality and continued investment of cultural improvement activity be noted. We have a second for that. Mr. Smith and everybody. Okay, item 17 is the productivity and efficiency plan review 2026 to 27 and 2025 to 26 review. This is on pages 301 to 320 of your event packet. Sarah, you're presenting this one. I think it's your last item.
Yes, thank you, Chair. The purpose of this report is to present the annual productivity and efficiency report. It shows the plan for 26-27 and review of 25-26. This is required by MHCLG under the Fire and Rescue National Framework for England. A recommendation is for the Corporate Governance Committee to note the updated and submitted report. There's an annual requirement to prepare the plan, and for the 26-27 there was a specific ask to cover both the financial years 25-26 and 26-27. It included specific tables and a specific format. The plan was submitted directly to MHCLG and was published as required. It includes the primary information, which is at table 1. It shows the budget forecast for 24-25 to 28-29, which gives you 2 years of actual data and 3 years forecast. This all aligns with the outturn reports and our approved MTFP. Please note this is based on the assumptions for the council tax precept at £5 increase for the remaining years of the MTFP. Table 2 shows the reserves position for the same period. And then there is a section on efficiencies, with table 3 showing these over the same period, and table 4 specifically covering other income and narrative explaining each set criteria. It was a prescribed format and the tables were prescribed. This is followed then by a section on productivity, again with an explanation explaining each of the set criteria. The plan itself reaffirms our clear priority to protect and serve our communities in an increasingly constrained financial environment. And other than that, Chair, I'm happy to take any questions. I wasn't going to go into any more detail on the plan.
Great, thanks. Do you have any questions? Mr. Smith?
For clarity, why is it that's 2?
So the stipulation for the productivity and efficiency plan comes from MHCLG. So this year they've wanted your past, what you've done during 25-26, but then also an outlook for 26-27. So it's sort of what have you done and what were you thinking about doing?
What's your opinion on this?
I think it gives a broader, personally, I think it gives a broader perspective, because at the time that you publish this, you're finishing your financial year, you're already planning for your new financial year. So it gives an opportunity to show how plans are embedded and it's not just set into 1 year and how you're working through.
My solution would be, because this is the first year in many that we've had a multi-year financial assessment, I think they'd ask us to plan ahead. We've got a degree of certainty with financial assessment that we didn't previously have. I don't know that for a fact. I would imagine that's the case, that because we know this budget we did have a decent.
Thanks. Anybody else got any questions? Anything on line? No, I don't see any hands up there. So, right, okay. I'll move back the bid and public productivity and efficiency plan for 2026-27 as required by the MHCLG is noted. I have a second for that one. Councillor Barton, everyone okay with that one? It was slightly quick off the mark, Mr. Morris. So we shall go on to getting in the end of my bundle now. So this is the final item, which is the after the incident survey 2025 to 26. This is on pages 320. 321, 328 in the agenda back. Matthew Walters to give the
Chair, members. So the purpose of this report is to inform the Corporate Governance Committee the outcomes of the after the incident survey. And for members' knowledge, this is a survey that we use instruments to pass out to members of the public in Leicestershire, nothing to complete and respond to how we are performing as a service. And she was alluded to from the public report overall performance, but this gives a bit more detail into the findings of the report and some actions against it. It's recommended that the Corporate Governance Committee take note of some findings and identify any areas for further analysis if required. I'd like to draw your attention to paragraph 3. And of the 2,845 survey files coming out, we had 165 responses. This backs up the positive feedback with overall 100% of respondents expressed overall satisfaction with the service they received from the CFA Rescue Service. And I'll draw some comments later on during the but just referring to paragraph 4, one of the areas that we've looked at is trying to be efficient within the planning calls department, and we've released a saving of £3,750. We are now posting internally, and we are not using city council. We're using the Power BI dashboards, which they are within the report. I think most of them from previous meetings. If we're going to draw your attention to paragraph 11, which was detailed a bit more comprehensive about the survey results, this links into call handling, responsibility and how finding arrived, how the respondents were informed during the incidents, and how they were kept updated, and then the overall satisfaction. This links into the performance statistics regarding call handling times, response times, and how the messaging running views across a wide range of functions, not just the virus internal aspects. So on pages 3 and 4, you'll see snapshots of the Power BI dashboard. Should you want to question on metrics within the Power BI dashboard, there's an overview of where we are in the different areas of the survey that we are asking the public to speak for us. And just to touch on, we've got within the dashboard, it gives comments that the public can make. I just want to touch on a few comments that have been placed within the report. This is from sort of members of the public. Very professional, reassuring, even installed 3 further detectors for additional protection. Thank you so much. There's numerous reports of great response from the communication was excellent, the whole team were amazing. And just like to draw your attention to one specific one, which feels very positive for service. They gained entry to Mum's bungalow, causing no damage at all. They recognised Mum needing help as a vulnerable adult and escalating to social services. They recognised the bungalow as a fire rescue support, and their people are extremely helpful. This just proves that as a fire service and the operational service, we don't just look at those of fire, we look at the people within the escalation work in the communities, how we can help them, not just on the fire aspects, but community aspect, and support them in the needs and the people and services. So I just wanted to move to those comments within that report. And I can take any questions on the survey.
Mr. Bakri, sorry, online.
Hello, Chair. Thank you. Thanks. Really good. Great to see the after incident feedback stats. Really good satisfaction. Is really very encouraging. The question probably is more around the statistical meaningfulness of the responses given cards. They're looking at that slide on my slide, page 323, where cards distributed and responses received. Does that give us what is there other ways of increasing the responses? Because at the moment it looks like that is the physical card distributed, and there's stats out there that shows that most people don't respond to a piece of paper shoved through the door. But is there other ways that could increase that response rate, which will then actually help the learning and development of the services delivery?
Yeah, thank you for that question. As with new technology and improving technology, we are looking at ways of how we can use different technologies, for example, QR codes, iPads, and survey metrics that we can increase the survey threshold. We do realise that those given a card and you're expecting people to go back home and fill those in, it's a little survey. But what we're trying to do is look at targeted activity to try and complete them at scene, different methods of technology that we can use to make it more streamlined and more user accessible, so we can get those figures up in the percentage of completing the survey. What we try to do is balance also some of the instances we go to. It's not apparent to give a survey out, so it's balancing the need of the survey, but also recognising where we can improve with different uses of technology.
I'll just add on to it, Chair. I think we also have to, the human dynamic in this is incredibly important. We've attended a merging incident that they're likely to have been involved in, and they may have bigger priorities to sort out, whether it be family, friends, health, well-being, belongings, insurance companies. We're a long list of things, and quite rightly probably come at the bottom. And I also think quite rightly, everyone's asking feedback about everything nowadays, and people just aren't going to do it. So we are continuously looking, because it's a really fair question. If anyone's got the answer, we are absolutely all ears. But we do have to kind of be sensitive to the environment we operate in. Sometimes people just aren't going to do it because they've got far more important things to do, and that's probably the realism of it all. But like I said, like Matt said, it's important you see some of those comments, because that's not us trying to polish anything or sell what we've had. That's actually what the public say to us. That's quite heartwarming for us. And we're looking at some new innovative ways of how we can actually feedback that into the organisation around getting other stations to read the feedback into the camera and playing that back. So we're looking at sharing that success. But you're absolutely right around the statistical relevance. I just don't know how we can improve it in the environment we operate in, but we're open to suggestions.
Great stuff. Was that okay to answer?
Yeah, it's the answer is as I expected it. It's the public sector service organisation, and it's not relying on, it's not like a commercial organisation where people need the fire service for their livelihood, to live, etc. So that is the real satisfaction, and the comments that were said that we were drawn to is actually real life. That they are worth what they say. The people written at the top now. I guess the response would probably be just that. Is there better ways to it? I think what I'd be interested to see is what was last 2 years responses and cards distributed. Secondly, what the national or sort of local peers or national approaches are, because this can't be just done at Leicestershire. There's other fire services that are doing the same thing, but are they got the same responses? What are they doing differently, if there is something to be learned? And thirdly, probably is to sort of take a step back and see if there's some funds to be invested in some sort of marketing type organisation which could help look at different new digital ways of working, of getting responses. So probably those sort of 3 areas would be my first simple responses to say how we could do better going forward to get that service to feedback to actually help improve the service. That's already good service, but if it is part of continuous improvement.
Hopefully answered. But I mean, I was going to ask a similar question on these, but most of the points. It's just I mean, very clear format of display here. So that's great. I mean, central does appear to be quite low on people responding back. There's 170 cars only I think 13 responded back. But sort of this my would to see people like to give their opinion, which is good, so which I don't do fine. But I think it's I think we just need to look into a bit more, particularly on the central side, which I think is less than. I do appreciate not everyone wants to return a card, and people do have their own other priorities. That was all the time. But we've gone to Councillor Parker.
Yeah, like you, I find this shocking, even in terms of questionnaires and samples returned. But looking at the grid that you've got with the responses received, cards distributed, it looks like it should slide down at the side, and we can't see other stations which are in alphabetical order presumably. So we don't know what the responses are like, say at Western or Southern or anywhere else that's name begins after the letter L.
Yeah, so I mean, I can definitely create information. That's on the slide. That's just a screenshot of a typical dashboard. I'm quite confident in want to show you the dashboard to today to provide information.
Is it no longer better or worse?
We can get that data. That's really on all the areas just to detail the dashboard of what the dashboard is and how it works. Obviously, that's just a snapshot, but release that data quite quickly to show you the metrics for the stations.
Okay, got Mr. Grimes.
Yeah, I appreciate the discussion around getting the figures up, etc. I think we're going to work with organisations across the public and private sector. We're pleased with what the results are coming through, and I think that to me is that it is, and together with the other information we've seen about customer satisfaction, I think is excellent. So yes, I appreciate trying to enhance that, but overall, you know, don't really want to be potentially chucking something.
Okay. Any comments or? It's.
It's really just a follow on from that, really. You know, in a corporate world, if you have stats like this, you'd be sitting on the top building, waiting to fight about it.
And the civil service rather.
Yeah, exactly. Can I suggest that maybe we start releasing some of these comments as cons, because to me it's a great improvement tool as well. If you're showing a happy service, and people that are genuinely interested in my service, and I think this is a really positive message, and we should be definitely staying involved.
Just on that briefly, your programme for the last corporate governance, we're going to ask Steve Marsh, our new head, well, not new now, our head of comms, to come in and give an update around our comms strategy around various bits and pieces. I know he wants to talk about how he wants to share some of the positive comments, both internally and externally. So we'll keep the powder dry for Steve's presentation, mate, if that's possible.
It's part of it.
Yeah, I do. Thank you very much, Chair. I wanted to come back on the point about the number of replies that we get. I was going to sort of draw two parallels there. One is, as the Chief quite rightly said, you know, most people are going to have much more important things on their minds than putting in bits of paper after a visit from the boys in. I was going to say blue, but it's not the dirty yellow colour. But the other thing is that as most people who's been in commercial situations will know, you tend to more likely get negative comments than positive comments. And I've always worked on the basis of about 10 to 1. So you get, for every 10 negative comments, you get 1 positive comment. So I think that the fact that less relevance to the number of replies, but more relevance to the fact of the quality of the replies, I think is what we should take away from this. And yes, I don't know, it's coming out about 0.5% of replies, if my maths are correct. And you know, you generally reckon of 1 or 2% is really good replies on such an exercise as this. So I'm not convinced that the number of replies we get here is actually that worth worrying about too much.
I would also just add, so the cards we give out, you can either do a paper reply where there's a QR code on it, so you can already use technology to complete it. So there is more than one way of giving feedback. We're happy to continue exploring it. If any of you from your council backgrounds has got a successful or more successful route, we are genuinely all ears. And I will look at what the national response levels are. I would imagine they're similar. I'll take that away and have a look and see if anyone has had some success. And
yeah, always good to suggest QR code on the over to try really use.
Can I just say regarding the replies? Obviously, you have to deal with a lot of RTCs, which tend to be young males. And of course, that would be price. They've got 12, that's the thing to be given.
But sorry, but if I may correct that, I wouldn't say better things. They've got more of the things on their minds, but not necessarily better. If I may correct that.
Fine, you've got to can't pull it back on it.
no, I think you're correct.
Fair enough. Okay, we don't know further questions, or Mr. Becker is gone, so that's great. Just like to thank Matthew for the report, and appreciate his time, and hopefully we're not as scary as you do make out, that we do obviously ask Grover Thanks, but the summary finding would be noted. Do we have a seconder? Okay, I'll go for this both at the same time. I'll go for Mr. Popeye on that one. So everybody's okay with that. Thank you. Urgent items, so no urgent items. Okay, date the next meeting. That will be the 16th September 2026. I think like that the purpose like thank everybody for coming through. Thank you.
Anyone get me out of the back car park? I don't know how to get, I don't know how to get up.
You're out now.